Good morning, everyone, and thank you for joining us today. On behalf of Tungsten Mining, I'd like to welcome you to this investor webinar. Today's session is in listen mode only. If you have a question at any point, please type it into the chat box and we'll address it during the Q&A at the end of the presentation. Presenting today is Tungsten Mining's non-executive chair, Gary Lyons, who will take you through the key outcomes of the scoping study for the Mt Mulgine project. I'll now hand over to Gary to run through the presentation.
Thank you, Simon, and welcome. Good morning to everybody. Thanks for joining us today. As Simon alluded to, today's webinar is focused on the key outcomes from the Mt Mulgine scoping study, which was recently released to the market. And I'm just having a problem moving the slides. Here we are. Just a little bit delayed. This is the usual disclaimer. There is absolutely nothing unusual about the contents of that disclaimer. Happy to get this deck to anybody that would like to have it emailed to them. Bit of a corporate snapshot. Tungsten Mining has a little over 1 million shares on issue. Last traded yesterday, closed at 14 cents. So market cap is a little under $150 million. And we have circa $10.5 million in cash. Tungsten, why invest in tungsten? And I'll take it that not too many have a great deal of knowledge of tungsten. But what we've seen of recent times is rocketing prices. Tungsten prices are an all-time high. The chart in the bottom right-hand corner, you'll see the little balloon there that shows a number that's 689. That's $689 US for a metric ton unit. That's 10 kilograms. And you'll see the bottom left of that chart that the price was indeed around $200 US back in 2020. And so what we've seen in the last 4 or 5 years is pricing that's disincentivized new operations by coming on stream. And there's a deficit being created. The deficit's been created for a number of reasons. One has been that China controls around 80% of the supply of tungsten concentrate, Russia a further 10%. And of course, it's common knowledge that China banned the export of tungsten concentrates back in February of this year. We're seeing a number of mines that are experiencing depleted resources. And the CAGR is forecast at 7.8% growth for tungsten by volume over the next 8 years, anticipated to double by 2033. Current supply is around 90,000 tons per annum. And I don't for 1 minute subscribe to the suggestion that demand will rise to 180,000 tons per annum, but I do believe it will rise in excess of 100,000. And what's so important is that deepening supply deficit is not, it's unlikely to improve to any degree. We just don't see any new supply coming on stream. Forecast for 2026 is the Almonty deposit in South Korea. Is expected to come on stream next year. But apart from that, and there's no certainty that will occur, but apart from that, we see no new supply other than ourselves. We're probably the front runner. In terms of usages for tungsten, the one that's always on top of the list for many people has been defense. It's only a small component of overall demand at 8%, but mining, construction, industrial, transport, and energy are other key users. And in short, tungsten, without tungsten, aeroplanes don't fly, motor vehicles don't move, and your partner's birthday present doesn't get delivered by Amazon. This is a chart that shows the main deposits, tungsten deposits, outside of China. And I'm pleased to say that tungsten mining sits right in the top 2 or 3 in terms of our assets. The largest one is a Canadian asset that that is large in terms of its resource and also its grade. It's owned by Fireweed Metals. They are in development, but anticipated to be some 5 to 7 years away from production. I'll just highlight a couple of names that are on the list that you may be familiar with. Number 8 is Mtpa, which is the Vietnamese mining operation and downstream producer of APT. Mtpa were indeed producing 9,500 tonnes per annum of tungsten concentrate. Their resources have been depleted, and their prediction for this coming 12 months is that supply will drop to around 2,500 tonnes per annum. So with Almonty's Shandong asset in South Korea predicted to run up to nameplate capacity by year end 26, they're going to look to produce 4,000 tonnes. So in short, doesn't replace the deficit that's been created by Mtpa. Mount Carbine at 10, that's the EQ Resources asset up in Queensland. And then we have the 2 or 3 of Tungsten Mining's assets that are listed there. Quite happy to take some questions and discuss this a little bit later. In terms of our key asset, the jewel in our crown is Mt Mulgine, which is in Western Australia. We have 3 assets across Australia that make up our global resources. In far north Queensland, the Watershed Project had a DFS completed on it back in 2014. It was done at a tungsten concentrate price of $400 a tonne. Another asset in the Northern Territory, Hatches Creek, is an underground mine that will look to open cut. It was operated during the First and Second World War primarily for munition purposes. But the jewel in our crown is Mt Mulgine. Mt Mulgine is located around 330 kilometres northeast of Perth in Western Australia. It is a polymetallic deposit. It consists of 2 critical metals, which are tungsten and molybdenum, and then it has a number of base metals. We have a copper, gold, and silver, and I'll run through the resource and the scale very shortly. In terms of our confidence in the resource, we've done a little over 110,000 metres of drilling. And throughout the process of the PFS and DFS, there is no requirement to do any further drilling. So in terms of level of confidence, we have around 75% of our resource that sits in M&I. The location of Mt Mulgine is a Tier 1 mining jurisdiction. Our neighbours are the likes of Golden Grove, Rothsay, Vault, Carrara, Mount Gibson, Warradah. So safe investment jurisdiction. It is a major resource. Mt Mulgine is currently one of the top 3 resources in the world by scale. It is globally significant. And as you'll learn during the course of this presentation, we anticipate making some announcements very shortly in regards to further exploration targets for Mulgine. Financial metrics that have evolved throughout the course of the scoping study and were recently announced. Firstly, the outputs for our preferred development case, which is for 6 million tonnes per annum of resource throughput. Strategic, it's long life, low cost, high value, and it contains 2 critical metals. In terms of our strategy is initial startup would be 6 million tonnes, but anticipating moving up to large scale of 15 million tonnes per annum. Polymetallic, as I mentioned, and the scoping study in terms of the commodity prices, this was all done at well below spot prices, and I'll share those with you. So there is significant upside in terms of the commodity pricing. So we did, in terms of the NPV, discounted 8% pre-tax. We did 2 numbers. We've got what we term a conservative number, which is $1 billion NPV, and an aggressive number, which is 1.4 billion, an NPV of 1.4 billion. And this is based upon the CapEx. So if you drop down just 2 items there to CapEx, we've got a range. We've got a low cost of 358 and a high of 495. So the 495 is the conservative position, and the aggressive position is 358. If we were to adopt today the spot prices as opposed to the discounted prices we use for the scoping study, the NPV would range from $2.4 billion to $2.8 billion, and an IRR anywhere from 30% to 71% at spot prices and taking an aggressive position. Operating costs of ranging between $25.40 and $30.80, and a total cash flow life of mine post-tax ranging between 1.98 billion and 2.56 billion, or annual cash flow of 103 to 128, and shows an impressive payback of between 2.2 and 3.8 years from commencement of production. Strip ratio is extremely low at 0.8, and as I suggested, at the run rate of 6 million tonnes per annum, the resource from one pit at Mt Mulgine will deliver us 23 years of operations. This is not the same slide. It's actually based upon a development case of 15 million tonnes per annum, so strategically the same points. In terms of NPV, ranging from 1.7 to 2.3 billion at the base commodity prices, and an IRR of 42 to 62%. And if we take spot prices of today, the NPV rises to between 3.8 and 4.4 billion, and the IRR from 69 to 93%. The capex increases to an aggressive figure of 631 million and a conservative number of 868 million. OPEX falls, of course, due to the increased throughput, ranging from $21.60 to $26.20 per tonne of ore processed. Cash flow post-tax, life of mine, 2.14 billion to 2.73 billion, an average annual cash flow of 275 to 340 million, and an impressive payback of between 1.6 and 2.2 years from commencement of production. Of course, strip ratio is the same. Mine life drops to 10 years based on this 15 million tonnes per annum of throughput. This slide shows our resource. The top part of the deck shows the resource attributed to Mt Mulgine, and this is one pit. So in indicated, we have 175 million tonnes and inferred 72, for a total of 247 million tonnes. This pit remains open down dip, and also at depth remained in mineralization. So overall, the asset of 247 million tonnes at 0.11% WO3 for 270,000 tonnes of tungsten concentrate. Molybdenum, some 69,000 tonnes. Gold, a little more than 1 million ounces. Silver, some 44 million ounces. And copper, 92,000 tonnes. Our global resource across the three assets is 328 million tonnes, and the other of resource providing 383,000 tonnes of tungsten concentrate, and the other values don't move greatly. So you can see the significant scale of our assets. In terms of annual production, we'll produce 1,178 tonnes of molybdenum per annum, 1,300 tonnes of copper, a little over 4,500 tonnes of tungsten concentrate, 9,600 ounces of gold, and a little over 500,000 ounces of silver. Modelled over a 23-year mine life, the total ore we'll process will be 136 million tonnes. Strip ratio I've mentioned, maximum pit depth will be 250 metres. Stage 1 is roughly 60 million tonnes. Stage 2 is 90 million tonnes, and stage 3 will be the 136 million tonnes. All open pittable, all one pit. And as I mentioned, we're looking to add a significant exploration target to this particular pit. Quite a simple flow sheet. Firstly, 3-stage crushing, which will move into primary gravity concentration, and then into bulk sulfide flotation, where pyrites, copper, gold, silver, moly move off to the north in this slide, and the heavier items drop to the bottom and go through magnetic separation. A kicker for this is that we end up with a high-grade magnetite concentrate, magnetite iron ore concentrate, and that drops down along with the tungsten. The tungsten then moves through a secondary gravity separation and then into scheelite flotation. We end up with 3 products. Our product suite consists of a tungsten concentrate, a molybdenum concentrate, and then a base metals concentrate consisting of copper, gold, and silver. In terms of recoveries, we'll recover 72.5% of tungsten, 70% molybdenum, 41% of the gold, 47% of the silver, and some 62% of the copper. In terms of the site, power will be by gas-fired generation and renewable energy. There is potential for solar microgrid solutions too, and it'll be designed with consideration for expandability, particularly when considering the large-scale production. Water is a critical ingredient. We require between 2.4 and 3.6 gigalitres per annum at the 6 million tonne processing rate. And we anticipate deriving that from fractured rock and paleo channel systems. And there is the opportunity for supply to be underpinned by regional basin systems. We're located due east of Geraldton, some 250 kilometres, which is one of the major shipping ports. When you consider that a 20-foot ocean FCL container has a value of around about just under $3 million at today's prices, we'd anticipate shipping one a day to the port of Geraldton. So no huge logistical problems. We're moving only small amounts of material, but of course, very high value. In terms of our workforce, where will it come from? The local township is Perenjori. There will be a small number of resources available from Perenjori in the immediate region. We'll have Dido's drive-in, drive-outs from Geraldton, and of course, FIFO's from Perth. Mine infrastructure, nothing too interesting here. It's just the layout of our tenements, and particularly where the pit is, the top left-hand corner there, the plant immediate to the south, and tailing storage facility, the TSF, further south, and then to the east is accommodation plant. We do have the opportunity to leverage off existing infrastructure in the region, such as camps and airstrips, primarily during the construction phase. This is our cost profile. I won't dwell too much on this. The capital costs we've been through. So the bottom of the first chart, 358 to 495, is what we used in that 6 million tonne per annum model. Financial inputs just below that. Capitalized waste is probably one worth pointing out, which would occur in the first year only, which is 30%. The FX rate that we've used is 0.65. In terms of commodity prices, the bottom right-hand side there shows that the commodity price that we use for tungsten is $425 an MTU, molybdenum 23, gold 3,100, silver 38.50, and copper $4.60. And of course, other than molybdenum and copper, the other 3 metals are significantly lower than current spot prices today. Considerable upside available when we look at those spot prices. This chart, this column chart here, shows the conservative and aggressive case. So the red components at the bottom part of those charts show that NPV, the baseline NPV, which is from $1 billion to 1.4, And the blue component on top of that, stacked on top of it, is the additional drive that comes from the spot prices. So if you then look to the right-hand side, you'll see the spot prices. The tungsten one is now already out of date. As I mentioned earlier, it's $689 currently. And molybdenum 2530, gold around that 4,100 US an ounce, silver 48.70, and copper a little under $5. So if you combine them at that spot at the spot prices, we're looking at a conservative 2.383 million and an aggressive case of around that 2.8. So significant value. This is another way of showing that combination, and indeed the payback. So the purpley area at the base is that base price NPV, and then the spot price stacked on top, which shows a combined number of around 4.9 billion at spot prices, and a payback ranging from 1.3 to 2.2 years. Very aggressive payback. Sensitivities, I think it's important to take a look at sensitivities. It is sensitive to currency fluctuation, tungsten recovery and the tungsten price, and also to processing cost. What it isn't sensitive to is capital. You can see just how insensitive it is to movements in capital cost and also mining costs. In terms of revenue, the pie chart on the left-hand side shows that 58% of our revenue will be derived from tungsten, 19% from molybdenum, and some 23% from the base metals. Opportunities and to offer some upside potential. Resource growth, we will be looking to release an announcement either later this week or early next week, which is pitched at a significant exploration target down dip and forming part of the current pit expansion of. The magnetite potential I raised during discussing the processing. There is an opportunity to optimize our flow sheet, and there certainly is potential to optimize mining processes and streamlining of waste and ore movement. Infrastructure strategies, I've touched on those, and the ability to leverage off existing infrastructure in the region. And then commercially, exploring potential technical, financial, strategic partnerships. We're fielding inquiries continually, daily, from potential offtake partners, and also lobbying hard both local, federal governments, and as well as those in the US. In terms of timeline to first production, we released the scoping study only around 10 days ago, so we achieved that in Q3 of 25. The PFS has been fast-tracked, and we will deliver that Q2 26, at which point we'll move directly into the DFS. We're absolutely confident with the outcomes of the scoping study that we will push on. And we aim to complete that in Q3 27, and FID will be completed Q4 of 27. We've brought in a specialist group that are working with us, who are assisting with that funding approach and ensuring that our PFS and DFS is covering absolutely every point associated and necessary to advance the FID. Engineering, procurement and construction will commence Q1 28, and we envisage pre-production mining to commence in Q3 of 28, or at the end of Q3 28, and production Q3 29. And I have to say that we have incentivized our entire team to bring that forward wherever possible. We'd like to get to that point of production. Some of the key upcoming catalysts, a couple of milestones that we have achieved in recent times. We have delivered as promised the scoping study results, and it's an exciting outcome from the scoping study. Q4, we commenced the Mulgine PFS, and we also listed on the OTCQB in the US following a number of inquiries from North American investors wanting easy access to TGN stock. And we've appointed US brokers, lobbyists, and advisors. We're following that up with a visit to the US at the end of next week for pretty much most of December, where we're doing roadshows right throughout the East Coast. Also this quarter, as I mentioned, we'll release an announcement that relates to expansion of the resource exploration target, and then engaging with potential offtake, strategic and technical partners. It actually has commenced, but certainly it'll become our focus in the first semester of 2026. Engaging with critical minerals offices, both in the US and Australia, and exploring funding options. The completion of the Mt Mulgine PFS, as I've reiterating, Q2 26, and then a potential NASDAQ listing. We're encouraged by the US investors to consider a NASDAQ listing, and it's something that we're certainly advancing quite quickly. The DFS commencement Q3 next year, completion Q3 27, and then to the final investment decision. And this is potentially where I want to show the real value potential of tungsten mining stock. There are two names that are familiar to most that'll be on this webinar. And I've used two companies that are in production of tungsten. One is Almonty, that's listed on the NASDAQ exchange and multiple other platforms. They have a current market cap of about 2.5 billion US. They have reserves of some 51,500 tons of WO3 tungsten concentrate. And they have an EV ratio of 55,789 Australian dollars. I've also taken EQ Resources that have a little under 34,000 tons of tungsten concentrate in reserve, and they have an EV of $6,302 a ton. And Tungsten Mining, a massive resource of 177,550 tons in reserve, and an EV of some $411. Not hard to see where the real value lies with tungsten mining. Board, I won't dwell too much on the board, but a couple of faces there. Russell Clark has been on our board for some 4 years. Russell might be better known to some of you as the chairman of Vault. Tan Sri David Law has interest in steel production in Malaysia and significant property investments. Best remembered in Australia, particularly Western Australia, for the transaction of selling Midwest iron to Sino Steel for in excess of $1 billion some 16 years ago. That's me. Thanks for listening to me provide an update of the outcomes of our scoping study. It's a very exciting time in our journey, and I'd thank you for your patience and listening to me. And if you have any questions, I'd be delighted to answer them.
Thanks, Gary. We'll just now open to questions. Please submit them through the chat box, and we will work through as many as we can in the time available. I did have a couple that came in via email beforehand, Gary, so I'll just shoot with those first.
Sure.
One of the big shifts in the updated scoping study is the significant reduction in upfront capex compared to the previous study. Can you expand on how you were able to achieve that and what drove the improvement?
Yeah. Look, for those of you that are not aware, tungsten mining, we conducted a PFS, which we released in January of 2021. Um, so almost 5 years ago now. The capex was some $670 million. And although it was only 5 years ago, that was a significant amount. Uh, it was at a time when tungsten prices were, you may recall from an earlier slide or a slide during the presentation, around 200 US dollars an MTU. And the NPV was very small. I can't remember exactly what it was, but it was very small, and the IRR similarly. What we did was, after picking ourselves up off the canvas, took us probably 12 months to do that. We looked at it through a totally different lens. We changed the executive, we changed the technical team, maintained our exploration team, done a fantastic job, and we looked at it through a totally different lens. We looked at our three assets, we looked at the floor sheet, worked really hard in the metallurgical sense, and we came up with a solution that has seen the capex sound fall significantly as a result of that. And we're really encouraged by the financial outcomes from that scoping study.
Right, beautiful. Thanks, Gary. The next one, can you just give a brief update on the permitting and approvals for the project?
Yeah, well, look, the asset Mulgine sits on MLs, on mining leases. There are certainly some updates to do in terms of environmental updates. We have, of course, consultants employed, but we've also got our own in-house team that are working on approvals, and they're all advancing nicely.
All right, excellent. Just on the decision to move ahead with an OTC listing, how do you actually see that benefiting tungsten mining?
Well, certainly, if you look at the geopolitical tension that's been created in terms of the critical minerals and metals space, there is certainly a void. We've got that deepening supply deficit. Mr. Trump has certainly placed tungsten very high in terms of his agenda, and that's been pleasing for us, because it's the tailwinds that's created are seeing us release the spinnaker and set sail. So there are fundings coming out of the Department of War and Department of Energy for tungsten. We're seeing all tungsten mines that are only very small scale in North America that are being dusted off and re-permitted, trying to get them into production. And in terms of global significance, I really want to emphasize this, that our Mt Mulgine asset, this one pit, is capable of providing tungsten to the US, to the North American space, its entire annual demand or usage of tungsten. Mulgine can provide the US with that. So the US is very important to us for a number of reasons, some that I've mentioned. And I have to say that the US investor has a deal more knowledge of tungsten than our Australian investor has. And we're noticing this, some of the presentations that we've been doing in the US. The knowledge of tungsten is very high, and it is being spoken about very widely.
All right, that probably leads me pretty well into, looks like, the last question here that's come through. Just obviously, you just touched on the scale of Mount Mulgine. Are you also seeing early interest from strategic and offtake partners or offtake
Yeah,
partners?
look, there aren't too many weeks, Simon, where we're not speaking with offtake partners. We've had product samples we've provided to most of the leading groups around the world, in Vietnam, Austria, and North America, and their testing proves that supports that our product is amenable to processing. And of course, where we've got this this deepening supply deficit, then people are desperate to get hold of significant supplies of tungsten. And of course, as I've emphasized, that tungsten mining has assets of global significance. It's up to us now to get out and tell our story, and that's exactly what we're doing. We're seeing some great movement in our share price that's risen from well, it's doubled in the last 6 or 8 weeks. So that's very pleasing as we're spreading the word.
All right, excellent. Thanks, Gary. Thanks everyone again who joined us today, and thank you to Gary for the presentation. We appreciate your continued interest in tungsten mining and look forward to keeping you updated as Mt Mulgine progresses through the next phases of study.
Thank you.
Thanks.